Hello, everyone. Welcome to Live Trading Thursday. My name is David Verbruggen, and I'm excited to be with you today. We got some good stuff to talk about as we look at tickers in the market, see what different stocks are doing. But of course, we're going to start off by looking at the market as a whole. But while I do that, I want you to go ahead and put in some tickers that you want to look at. Maybe these are trades that you're considering, trades that you're in. We can even look at historical trades. We can look at some trades that you did a few days ago or a few weeks ago and analyze those together and see what's working and what isn't working. So go ahead and throw those in the chat box, the comment box there. That should be there for both Facebook and YouTube. And I remember last week, we actually had some great participation, and there wasn't even enough time to get through all of the tickers. So go ahead and get yours in there quickly so that we can make sure we can get to them. All right, well, let me go ahead and share my screen. There we go. Keep in mind that all these examples that we're going to be going over in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. Let's start off looking at the overall market here. Like I said last time, the bear market's not over, right? We got another very clear signal proving that Tuesday. Look at that. That was a massive candle. And actually, it really was bigger in the sense that it gapped down. The futures that morning were even up 20 points or so, and then it came down. So we were down 177 points that day. That's a massive day down. So bear market's definitely not over. This day alone wiped out nearly 4 strong days of, moving up. So that was kind of interesting to see. Big day down to be sure. So where does that put us now, right? Well, we kind of have this line that we can, this downtrending line, shorter term right there. That probably looks good. And then I'd maybe look at Monday as an anomaly. It kind of opened up right at that line as came crashing down again. And now we've got another line that we got to contend with right here. This is maybe a line isn't the perfect thing, but you kind of have this zone of support right in here, turning to resistance right in here, turning back into support. And that's where we find ourselves right now. So we're kind of in this, in the short term, we're kind of in this bearish wedge right here, this descending wedge. And so we'll, if we're going to get bullish in the overall market, we got to break through the EMAs and start moving up. My opinion, the more likely thing that we're going to see is that we're going to break down through the support line and start to make some lower lows. And if we do, we're in for, another 100 plus point drop, most likely down to 3750 area or below even. Couple things that could sway that. We do have the Fed meeting that's next week. So depending on what they say, that could either make this scenario a reality very quickly, or it could, break this downtrending wedge and start moving up. We also have earnings that start in about a month. So that's something to keep in mind as well as we're thinking about potential trades. Just want to make sure that you're out of your trades before earnings and planning to do so. So that's kind of a look at the overall market. Let's go ahead and jump into some tickers. And again, I'd love to hear from you guys. So throw in any stocks that you want to look at, any questions that you have, or things that we want to analyze together. But I'm going to go ahead and get us started off here with just a few oil stocks, because those are the guys right now that are bullish. It's always fun to look at some bullish stocks first. And, you see this massive drop here on Tuesday. And, well, we didn't really see that happen in oil stocks. Let's just start with DVN. I'm just picking some out of a hat here, right? And you can see that was Tuesday. So it's just kind of like a normal day down. That's all that was. Looks like right now it's using the 20-day moving average kind of as a support in the very short term right here. Down a little bit today, which is good because that means it might be able to give you another chance to get in. So if I were to look at this, I don't know if I'd want to buy on a doji, maybe at the very end of the day, but not right now. And at the end of the day, it'd be even better if this thing started moving up a little bit. But what if you got in at about $71 a share? You put a stop loss maybe at $68 a share. That's a very reasonable stop loss to put in there, you're not going to be losing too much percentage-wise. You're below that key moving average of 20 EMA. If you wanted to, you could even structure maybe a credit spread and maybe do that one below the 50. What if you did a 65 by 64 credit spread a month out? All right, let's do something fun here. Let's just go ahead and look at this. Let's see if there's any money in that. I'm completely going off a script right here. We're just going to take a look at this and see if that's something that would even be doable. So let's go month out, Friday, October 21st. And remember what I said at the very beginning, we're going to have to keep an eye on earnings. So I didn't actually do that. When is earnings on DVN? I might just shoot myself in the foot here. Okay. It's going to be a little further out. So they're a little later. So we're good for a month out. Let's take a look here. So October 21st, and we had talked about a 65 by 64, but they only have $5 wide strikes. So that's already going to be a little bit of a bummer. But, you know, what if you did 65 by 60? That's a really, really good ROI potential for a credit spread right there. You're looking at, you know, probably just over 30%. Let's see, if we drop that down, do the 60 by 55. I can do that real quickly just by one click of a button there. We're definitely looking at a safer trade. This one's going to be closer to your like one standard deviation trade right there. Short strike at $60 a share, and you have the potential of making $66 off of a $434 risk. And I'm just seeing that on these numbers, and the keeps moving on me right there, the top left there in this box here. I'm looking at October 21 as the expiration, and I can see 434 if it all goes completely wrong, and if it goes the right way, 66. That's my profit versus my expense right there. So a 66 by 55 on the DVN chart right here, that puts us at, did I say 66? I'm at 60 by 55. So draw it like that. And October 21. So right around there. It's not a perfect drawing, but that's what our credit spread would look like. That's pretty far away from the price action, right? And you've got a chart that has proven that it likes to be bullish even when the market does something crazy. In fact, it was only when the market started moving up that you know, the oil stocks started to come down quite a bit. So here's just an example of something that could be considered. Now, again, I'm not telling you to go out there and do this trade right now. If you want to, go out there and paper trade this right now, because that's some great experience. But there's a lot more to it on the management side and everything that we would need to talk about before you go ahead and just start trading this trade right now. But we're just looking at what are some options that are you know, realistic out there right now. And so this is one that definitely could be considered. Let's look at another oil stock. And again, guys, feel free to throw in some of your own tickers. We've only got about 5-10 minutes left here. So if you got any that you have any questions about, throw them in there. Here we go. Marathon Oil. Here another one that actually was making a nice uptrend there. Starting to pull back a little bit. I like that candle better than the one on DVN. It's not a doji. It's definitely wanting to move up again. And so if this thing continues on, there's a whole host of things you could do with this this stock right here. You could do the step one trade, just buy the shares. I'm a little hesitant to do a step two trade, especially with it not being right on the it's not the best buy point. I would want to see it come back down to the trend line. So for a step two, you know, straight call or a step four bull call debit spread, I think I'd want to see it come back down to the trend line before I would do those. But again, this is a situation where maybe that step three credit spread could be something to consider, right? You've got a couple wicks right there at the 50 EMA as well there too. So it looks like the 50 EMA could be acting as some level of support. So I would want to structure my credit spread for the short strike to be below the 50. That would be more comfortable for me. And this is also something that you could consider on covered calls. I feel like we forget about the cover call strategy sometimes, right? So covered calls are very underrated. look into those, because something like this right here, Marathon Oil, you can pick up 100 shares for not all that much capital and then start writing cover calls on it. So keep that one in mind. All right, I see you there, Texas Palmer 11. I'm sure that's not your real name, but maybe Palmer's in your name. CTRA, let's take a look. Thank you for throwing that one in there. Coterra Energy. Okay. Yeah, another energy stock, and that one's actually in a nice uptrend. So let's draw this line. I think that right there is going to be pretty solid. We've got 1, 2, 3, 4 touches. Okay. Only thing I don't like about it is it's probably closer to resistance than it is to support. We could throw maybe right about there. Something like that. That's not perfect, but that's going to be pretty close right there to your resistance line. And wow, nice move up yesterday. Again, energy didn't really hear that the whole market crashed 177 points on Tuesday, because look at that candle. That was Tuesday. That's not a big deal. That's kind of like a whatever candle, right? And so yesterday, nice big move up. So here's the thing with it, it's almost like yesterday was too big of a move up. You're not at a great buy point here. I love the chart. I love what it's doing. I just want to see it come back down and give another bounce. If this thing comes back down and gives another bounce, let's look at what we could do. Let's say it comes back down here and then it bounces around 30 or so. What if you were to structure a debit spread? I like to make my debit spreads green on the chart. In that case, you could be looking at an ROI potential sometimes of 100% or more. And a very strong chart like CTRA, as long as energy keeps moving in the direction it's going, could do very well with that. So that's definitely one to keep in mind. That's a good one to bring up. Thank you for that, Palmer. Appreciate that. Guys, if you have any others, throw those in there. Love to go over those with you. Let's take a look at what might happen to the bearish side. Now, we're coming back down here. Actually, just the last few minutes, the market's moved up just slightly there. But we're still close to this pretty important line here at 3,900. But what if we break that line to the downside? What if we start moving down? What are some stocks that we could be looking at for bearish moves? Maybe to buy a put, maybe a bear put, something like that. Let's take a look at the overall market. And I want to, there you go. Last month, what has been doing the worst in the last month? Well, it's going to be tech and communication services. So let's look at a couple. Let's look at Microsoft. Microsoft, it's been getting hammered the last few weeks. And it's kind of near these lows right here, right? Just like the market's kind of coming into an area of support. What if the market rolls over and continues down and Microsoft decides it's going to go ahead and break some support level here as well? How far could Microsoft go? I need to expand the chart a little bit. It's kind of, we of course don't know how far it's going to go, but we can look at the chart and see how far could it possibly go. And so there's some support. This is a level right here that I'm looking at. That was resistance back in January 21. And then support right there in March of 21. So that's right around the $225 level. So that could be a $20 drop, almost 10% on the stock. Imagine what that could do for a straight put. It could do some damage to the chart and some good things for your account if that were to happen. So that's one to consider if the market breaks that key level and if Microsoft breaks this key level as well. Let's look at another one to the downside. INTU, Intuit. There we go. Oops, let's get a little closer in. This is one that was in a really nice downtrend. Look at those lines. It respected that very well for a while. Then it broke it. Yep. And it moved up. Came real close to the 200 simple, started to move down. And is it looking to make a new downtrend now? We can start some lines. We already know the characteristic of the stock. It likes to downtrend nicely. So that's one to keep an eye on. That could potentially be a line. You already got 1, 2, 3 touches. It's moved down from there, but you get another move up and then a bounce down. That's something that could be considered to the downside. What if you did a, what if it came back up and you were able to structure a bear call and get that short strike above the 200 simple, which if this thing, moves up and then starts to move back down, that 200 simple is probably going to be continuing downward and coming just below your short strike there. That has some very strong possibility as far as probability of profit goes when you structure it in such a way and you have the downtrending resistance line in your favor and you've got the 200 simple moving average in your favor acting as a protection line as well. So those are just some things to consider and to think about. That's going to wrap it up for today, but I want to leave you guys with something before we go. At the end of these, I always share an event coming up that I want to invite you to. This next one's a little bit different. We did an amped, it was a topical webinar. It was for Amped, our long-term investing program, but it was really a topical webinar on how short-term trading differs with longer-term investing. And we recorded that. I want to give you that recording right here, right now. It's completely free. I'm going to throw that in the comment box. So the nice thing is this is on demand. This isn't something that you need to go and register for and then, be there live and on time kind of thing. I'm going to give you guys a few seconds. You can just copy and paste that link right there that I just put in the chat for both Facebook and YouTube. And they'll bring you right to a video. It's about 45 minutes where we talk about the difference between short-term trading and long-term investing. Some great educational material. Also, if you have any interest in getting plugged in with our Amped program, we'd love to give you more information in there as well. So go ahead and check out that link. It'll be up there for just a few more seconds, and then we're going to be closing it down. Thank you guys for being on today. Thank you, Palmer, for throwing in your ticker there. That was a good one to look at. That's actually really, I think you brought up the cleanest chart that I had on my whole list here. So there you go. You got the winner for today. We're going to see you guys next week. And you're an angel pilot and pay your aircraft expenses via your training. Okay. So I believe I know what you're talking about. I did some angel flights back in the day, back when I was flying. I did probably 3 or 4 of them, picked people from all over and then flew them to Houston for cancer treatment. So thank you for doing that. That's a great way to use your skills and to use your airplane. And then I love that you're using trading to fund this really good mission that you're doing. That's so cool. I'm glad you threw that in there. You're just kind of like, hitting my buttons on all different kind of areas here. That's pretty cool that you're doing that. I love that. So guys, that's the potential power of trading right there. Is you can use those funds for doing some really good things, just like Palmer is here. So thank you, Palmer. Thank you guys for being on. Really appreciate it. And we're going to see you next week.